What's going on, everybody? This is Economic News Insights, and today we're going to talk about what I sell my cash for and why you should consider selling your cash as well. So, this is not professional financial advice, but I did want to make this video because the information here is very useful. I know that when I received it, I actually was happy to receive it because it made total sense. We're living in an era where there's hyperinflation, right? So you know that if you're sitting in cash, you're losing purchasing power year over year. Ever since 1970, right? The fiat based system that we're living in, the money has always devalued. You know, your grandpa might have paid $200 a month for his rent. Nowadays, you're paying 1,200. You get the idea. Things have appreciated in value. So being in savings in cash is not where you want to be. So what you really want to have is assets. Now, there's different levels of assets, right? There's investments, then there's speculative investments, and then there's gambling. I'm recommending that you get into investments. So there's safe investments, and then there's higher risk, higher reward investments. I guess it just depends on how aggressive you want to be, right? But the main reason you want to consider assets is because of inflation and loss of purchasing power. Banks pay low interest as well. So you're not really, if you're sitting in cash, you're not really getting much. I mean, the most I could probably get is a 3% annual return, right? So if I've got $100,000 in there, they'll give me 3%. That'll give me $3,000 per year. Whereas with assets, you can get a lot more. But again, you're going to want to get into assets that are strong, that appreciate over time. But it's opportunity cost of not investing. Okay. So, what are assets? Assets include stocks, real estate, businesses, buying someone else's business, getting into someone else's business as an investor, cryptocurrencies. We've seen this ETFs, stuff like that, bonds, assets that appreciate or generate income. Right now, if you wanted to get straight out of the box, where I've seen the most success or where I've seen the most stable success has been in indexes. S&P 500, NASDAQ 100, those seem to be really solid spots for beginners. Obviously, do your own research. This is not professional financial advice, so you should always do research on the NASDAQ, do research on the S&P, and see if this is where you want to put your money. But once you do the research, you'll see that slow and steady over the last 50 years, the S&P and the NASDAQ have gone up. Sure, there's volatility. You have to bake into the cake some volatility. You have to expect some volatility. Nothing just goes up all the time. In fact, recently I had success investing in the dip that happened in April. That was a good time to buy, right? In April when the market kind of went down and then it came back up again. But there was also the risk that yeah, you're trying to catch a falling knife, right? So it's like it's coming down, but you don't know where the bottom is. In this case, we got lucky; it recovered quite quickly because it was kind of like what we saw in March of 2020 as well. But this is where most of the wealthy are putting their money. So follow the monies, follow the smart money. So the wealthy people, they're invested in the stock market. It almost seems like in this day and age, you should be invested in the markets, financial markets, whether it be crypto, stocks, indexes, whatever it is, you should be trying to do it. Like I said, it seems like right now, if you wanted to play it safe, S&P 500, you could probably go with something by Vanguard, or you could get in one by JP Morgan Chase. Just ask them for the NASDAQ index. Some of the ones that I personally own, I own QQQ. I also own the Vanguard S&P 500, and I also own some of these other stocks. Thank you to everyone who's crushing up the likes as we continue to get this video out there. I see some people tuning in. I know it's early in the morning. I just wanted to put this video out there and have this conversation. Let me know what you guys think, what assets you're personally buying and what you're investing in. But let's see what else we got going on to talk about here because we are live. Let me dial this in some more. So they also offer passive income. So one of the things that's a benefit is the dividends. Some stocks like Pepsi and Coke actually pay really good dividends. So you may find that to be good. Also, there's some tax advantages. Maybe you can get into a 401k, or maybe you could get into a Roth IRA or another type of IRA. There's 3 different types of IRAs, traditional IRA. So we'll see what you guys end up deciding to go with. But let me know in the comments, and we will see you on the next one. Let me know what you guys are all planning to do.